Not sure if you saw it this morning, but mortgage rates are now officially in the sevens. And folks, the 10-year note is going up this morning, so we will likely see even higher mortgage rates by the end of the day. What does all of this mean? We've had a conversation over seemingly the last 3 weeks where interest rates were certainly trending to the low sixes. We had a lot of experts start talking about mortgage rates in the fives. Some were daring to say the high fours. If you remember those conversations, I had thought that they were aggressive. I had never thought mortgage rates would go that low. And now we have seen a complete reversal, rates now in the sevens. I think you do have to ask yourself, what, if anything, does this mean? Well, the first thing I think it means is if builders were putting together a plan for number of units to build next year, in 3 short weeks, they are likely getting in a boardroom and having a very, very different discussion. The new home market at 7% plus is a very different home market than at 5.5%. So I would expect that builders will be revisiting their plans for new construction. It is my hope that not only they adjust unit counts, but they also adjust size. One of the things that I have believed for the last couple of years is that one of the ways out of this horrific, broken housing market is for builders to build, quite simply, smaller homes. The thing that hasn't come to market in any great number is a focus on entry-level or first-time home buyers. So the first thing that's likely going to happen at 7% mortgage rates is A, we're going to have less new construction, and B, I suspect smaller would be my expectation. Next, let's flip to existing home sales. The existing home sales was starting to percolate. There were starting to have serious conversations about some, not a lot, but some move-up buyers listing and selling. The move-up buyer is without question the missing link to our broken housing market. I have told you, and now we are expected to see more reports about turnover being at record lows, average duration going higher, all things that happen in a broken housing market. As we were getting lower, you could absolutely say that we would get some, at the margin, move-up buyers back into the market. Well, guess what? At 7% mortgage rates, they're not coming. It is an ice-cold real estate market. Again, you are going to very quickly see 2 camps: the want to sell and the need to sell. The want to sells will do exactly what I've told you was coming. They will list. They will have some wish pricing. They will have no price reductions. And in 90 days to 6 months, the listing will expire. It will be withdrawn. And it was fake inventory. You are seeing these today without question. If you do what we talk about in one rental at a time, you are seeing some non-motivated sellers. And they're just going to take it off and, wait for better days. But for us, these motivated sellers are going to become easier and easier to find. I don't know if you took the time to watch the excellent interview, I believe, with John and Lisa yesterday, the dynamic duo out of Boise. But they are doing the right things. If you listen to that conversation, they're doing the work, they're writing offers, they're asking themselves, how the heck are people buying these? These are bad deals. And also, you heard them say, you know what? The market is starting to turn. So again, these are all conversations that I hope you are seeing. If you're doing the work, you have a buy box, you're doing the work, you're in our school community, you will start to see people find motivated sellers. We talked about, I think it was Renee, forgive me if I misspoke, finding a motivated seller for a property that was worth $140, bought it for $100. Some people just have to sell, and it's It's easier to sell than, hopefully wait for someone. So the good news about 7% mortgage rates as we roll into 2025 is if you are disciplined, if you are in the right communities, if you are literally writing offers, several a week, the odds are in your favor that you will find these motivated sellers. So again, 7% mortgage rates are here. And then lastly, I guess we'll talk about flippers, wholesalers, all of that. I want to remind you about an interview with Ryan Pineda. Ryan Pineda put out a call for 2025 where he thought mortgage rates would be, 5.5 or below. At which point I said, I don't think so, brother. I don't think that's coming. And if you were building a business plan with 5.5% mortgages, and now we're going to have 7.5% mortgages, you got to throw that plan away, right? The plan to flip entry-level housing or any housing of that is just different. It's just different. So again, we are in a higher for longer environment. So again, I just want to encourage you. I want you to have discipline. I don't want you to get stressed. It's never easy, but it will get easier week by week, month by month. 2025 might be a buyer's market the entire year. If we have 7% mortgage rates for all of 2025, it could be a buyer's market all year. The housing market is quite simply broken. It doesn't function without the move-up buyers. And if we don't get rates to 5.5, the move-up buyer's not coming. They're just not coming. Who would trade a 3% mortgage for a 7? That is ridiculous. That is not coming. All right, let's talk about the JOLTS report, the first of 3 employment numbers. We get the JOLTS report this morning. We'll get ADP tomorrow. And on Friday, we get the coup de grace, the big jobs number for the week. The JOLTS report, just to give you some context, last month was 8.04, right? Just call it 8 million between friends. It was expected to be 7.99. Again, let's call that 8 million between friends. It was expected to be flat. Well, folks, it was not flat. It was, in fact, a large miss. It was the lowest reading since January of 2021. It came in at 7.44, a miss of 500,000 job openings. Is this a sign of something cracking or breaking? Is this a sign that the job market is trash? Too early to tell. Quite simply, too early to tell. But remember what I warned you. One of the unfortunate consequences of a higher rate environment in 2025 is if you get laid off, your duration on unemployment will likely be higher and might be uncomfortably high. So make sure you have reserves. Make sure you are good to go. It's just, again, 2025 is shaping up to be a pretty yucky year. Again, remember, in yucky years, there's still plenty of ways to make money. You do need to find the motivated sellers, the ones that have the don't wanters. It is a very simple recipe, but 2025 could be it could be a yucky year for most people, but an amazing year for a few. And it is my hope that you are a part of the few. I do want to congratulate us. One Rental at a Time did a thing yesterday. We became the number 2, the second highest ranked real estate investing school on school. As of this morning, there are 324 real estate investing schools. We are number 2. So we are in the top 1% of schools. We are at a price point of 67 cents a day or $20. We give hundreds, if not thousands of dollars away in value every month. So it should be growing really, really fast. I do want to thank the one member that joined yesterday. Mohad, thank you for joining. Welcome to school. Don't forget to introduce yourself. You got to get to level 2 to get 6-hour masterclass on creative financing. Lots of value. Get to level 2. And if you really want to ball out, you got to get to level 3 for the 10-week boot camp. So you can take that at your leisure. Again, join school. If you're not there, you're not around the right people, you're not getting encouraged, you're not just doing the right things. Also in school, if you are there, remember there's a brand new mastermind this morning, brand new mastermind. One of those groups that we created decided to have their own mastermind, which I think is amazing. It is for licensed real estate agents, licensed brokers. Heck, let's even throw in licensed mortgage brokers. Basically, the professionals that are in the business, right? The unicorn agents, if you will. Again, join that. I've checked the calendar. I forget what time it is. My bad. I should have checked. I didn't. Shame on me. But again, there is a mastermind just for licensed real estate agents, which I am so happy about. I don't know if you saw this from Ford, but Ford is having a rough time selling EVs. Yes, Ford is finding it very difficult to compete with Tesla. They lost, I can't even fathom this. They lost $38,000 per vehicle. That's, sorry, Ford, you're not very good at building EVs. Maybe you should stick to hybrids. That's crazy. And they did beat top line, bottom line, but they did cut guidance. They basically had lower expectations. And I think we're going to see a lot of companies cut guidance. More on that in a minute. Mike Simonson came out with the latest weekly numbers on real estate, and they're actually rather interesting. Home prices up 6% year on year. Inventory down week on week, but up 31% year on year. 59,000 new pendings this week. That is up 9% year on year. Pardon me, I can't fathom that we're going to have that kind of big jump next week now that we got rates over 7, but hey, you never know. And price reductions have seemed to stabilize the last 12 weeks at 39.5%. Again, I think the average is 33, so still definitely above trend. JP Morgan, I don't know if you guys heard this. I think it was a month ago, it might have been 2. There was some kind of glitch in their ATMs, and there was this quote unquote infinite money glitch where you could do some kind of deposit checks, withdraw money, nonsense. Well, folks, that is fraud. That is either check fraud or bank fraud. And JP Morgan is not having any of it. They are going out and suing folks that took advantage of that. And it would not shock me if there is criminal charges. Banks don't play around. They don't play around. They will definitely go after you. So, yeah, not good. Sorry, folks, fighting off a sneeze. Yeah, wire fraud's federal. That's not good. Larry Fink is out talking about what the Fed's going to do. And he's basically screaming that Zuber is right. Actually, he didn't say my name, but I knew what he was thinking. The Fed is not going to cut rates as much as people expect. In fact, Larry Fink thinks there's only one more cut in 24 and a lot less cuts in 25. This is a quote Larry Fink, quote. It's not my words. This is his words. Larry Fink said, "I believe we have greater embedded inflation in the world than we have ever seen. Government policy, government spending, immigration, and onshoring. These are all things that could lead to higher inflation for the long trend." We did get Case Shiller for August. Again, as always, this number is so old, it is not even valuable. It is only valuable in historic contexts when you look at long-term trends. There is nothing about a number on basically November 1st that is giving you August data that's interesting. You shouldn't trade. It's annoying how late this data is. But Case Shiller has year over year home prices up 4.2, month on month down. Yes, folks, negative, down 0.1% month on month. Lastly, we can talk about Cushman and Wakefield. They put out a report about office vacancies, and it looks like San Francisco's got 34.9% office vacancies. Austin's got 29.8%. Seattle's got 29.3%. And finally, Minneapolis with 29.1%. Can you imagine 3 out of 10 office buildings are vacant? Woo! That is not good. We should talk about consumer confidence. Again, we got 2 economic reports this morning. And while Jolt's report was a massive miss to the downside, the consumer confidence was a huge beat to the upside. Again, to give you context, last month it was 99.2. All of these are baselined on 1985. So, hey, are we doing better or worse than 1985? So if it's below 100, it's worse. Above 100, we're doing better. Last was 99.2. Estimate was to slight uptick to 99.5. Boom, bingo, bango. 108.7. Yeah. So the consumers are starting to feel better. Is it because the election's almost over? Is it because rates were low, now they're higher, right? A lot of this data is fuzzy. We will see what's going on from there. And then we'll close out with some earnings. McDonald's beat top line, beat bottom line, but obviously have the E. coli breakout to deal with next quarter. Royal Caribbean, that was very interesting to me. They missed on revenue, beat on earnings, but also raised guidance. Again, it does look like a certain section of the economy, the consumer, bifurcated, K-shape, whatever you want to call it, is doing quite well. SoFi beat top line, beat bottom line, and raised guidance. Crocs beat top line, beat bottom line, lowered guidance. JetBlue beat top line, beat bottom line, but forecast a 4 to 5% revenue decline because of election uncertainty. So good news is, folks, the election is almost here. It's 1 week away from starting today. I guess something else I wrote down, Bitcoin's at 71K. I don't know if you guys saw that this morning, but Bitcoin's up. 10-year notes up. Last time I checked at 4.33, so rates are going higher. At the end of the day, folks, 2025 might play out like I think. Might be a yucky year. Might be a lot of folks that need to start recognizing pain, right? The commercial market might start to recognize pain. There's going to be deals out there. I'm starting to see more listings for multifamily in my market, but they still are not priced accordingly. But of course, that is where it starts. You got to get them listed so you can eventually figure out who has to sell and who will be foreclosed on. Lots and lots of stuff going on. Folks, hope you have an amazing day. Like, subscribe, comment. Of course, do me a favor, join school. Come out to our Vegas event. We've sold over 100 tickets. VIP is halfway sold out. Go to Eventbrite, book your tickets. You won't be disappointed. Folks, take care. Later.